I think you're right, Dom, that a lot of the volatility began as an interest rate concern, and the valuations of these stocks and the cash flows being so far out into the future in the case of some of the high flyers during the pandemic, now all of a sudden making them less attractive to investors. But I think the thing to keep in mind is a lot of the problems with Facebook are very idiosyncratic to Facebook itself and some of their other apps. So one really good example of that is the challenges they face navigating the new iOS privacy stuff. But I think a bigger problem here, and the reason I'm not racing to buy this stock down 25%, is you really have to bet that Mark Zuckerberg can build a brand new business from scratch the way that he once did with Facebook. So he didn't build Instagram, he didn't build WhatsApp, he built Facebook. Can he build another one? Because that's what this metaverse thing really requires. Now, he has the cash flows, he has the foundation to invest a lot of money, but can he catch lightning in a bottle a second time? They're talking about losses for Reality Labs and all of the meta stuff going out 10, maybe even 15 years. So do we want to make that bet that he can do that? Because the core Facebook business right now is not in great shape. It's a huge business, but they're facing all sorts of challenges. And the growth rate that they're talking about, 3 to 11%, like that's not going to work for the investor base in this stock. So it's a tough situation. I'm not saying I would never buy it. I'm just not a buyer here. I don't know that I want to make that bet that he can do the same thing twice. Very few people, like Steve Jobs did that. Very few people have really been able to do that twice.
I mean, metaverse is like Farmville on steroids, so maybe there is a foundational aspect there. Jenny, Josh brings up a great point. You got to kind of build this thing, but you really can't do it without making the investments. We kind of found out that they lost Meta Platforms $10 billion last year on the metaverse initiatives. But again, you got to invest something to make some money down the line. But there's also this pivot of Facebook and Meta Platforms overall on its Facebook side of things towards some of the more video-oriented content. That's the Instagram Reels side of the business that puts them very much in a more competitive environment with TikTok and with YouTube, owned by Alphabet, by the way, right? So is how much of this story and the downdraft today is about whether or not those investments and the chips being placed are right for investors at these current price levels?
I don't really think it's about that. I think it's about the fact that we've had a lot of companies in the overall stock market that haven't been just priced for perfection, but they've been priced well past perfection. Now, look, Facebook wasn't terribly expensive going into this. You know we own it. I think a week or two ago when I was on, I was saying, yeah, we own this, and it's the only FANG we own because it trades at 23 times, and we think it has high teens to low 20% earnings growth. But I don't think this down 25% move that we've seen in this or Netflix or PayPal, it's not really about the specific message that the company is giving right now. I think it's a broader statement in the market that's saying, like, no, you need to deliver us not just perfection, but you need to deliver us 20 times better than perfection. And I'm saying 20 times just metaphorically, like something way better than we ever hoped for. Josh said that you need to believe that Mark Zuckerberg's going to rebuild this from scratch or start again. I don't think that's true. This is a huge free cash flow company. And where we stand right now is on current earnings of the current businesses. It's trading at about 15 times next year's earnings, 17 times the year after that. We know that the revenues, as they exist today, right, we're not starting over with revenues. As they exist today, revenues should grow in the high teens percentile. I'm not exactly sure what earnings will grow at going forward. It'll clearly be lower than what I was expecting them to be a couple weeks ago. But I don't think it's necessarily a rebuilding story. I think we need to remember that the core of this business... Okay, I think we need to remember that the core of this business is very, very profitable and very robust. And Josh, like, you can say user growth is negative, but we know that's going to toggle. And we also know that we were in a disproportionately high technology kind of driven time in the pandemic where everybody, right, like everybody was using video games and Netflix and Zoom and Venmo and every digital thing more than they do in real life. So here we are returning to real life. We're all going to concerts instead of playing on Facebook. We're all going on a cruise rather than, I don't know, playing some video game, right? So we're just getting into a more normal life. I don't know if negative user growth sustains forever or not. Probably it doesn't.